Bernie Madoff stole $65 billion, the largest fraud ever. Wall Street worshipped him, unaware of the looming betrayal. He was Nasdaq's former chairman, a pioneer of trading. Investors believed his word was law, his strategy's untouchable brilliance. Year after year, steady returns flowed, not too high, never failing. He promised certainty in chaos and delivered illusions instead. Behind the curtain, nothing existed. No trades, no secrets, just new money paying old, a growing illusion feeding itself. Then came 2008. Investors demanded withdrawals, but accounts were empty. His empire crumbled in panic, lies finally unraveling. Families ruined. Charities collapsed. Banks humiliated. Bernie Madoff became not a genius, but history's greatest financial con man. Don't forget to like and subscribe to Financial Story so you won't miss the next shocking financial stories. For decades, Bernie Madoff was the man who made the impossible look effortless. While markets rose and fell, his clients enjoyed calm, steady growth. Unlike others promising wild profits, Madoff delivered consistency, returns so smooth they seemed immune to crisis. This was his greatest trick: stability in a world of volatility. It was the very thing every investor longed for, especially in America, where uncertainty always lurked behind opportunity. He built an aura of exclusivity. Not everyone could invest with Bernie. Entry into his fund was a privilege, a mark of status. Billionaires, charities, banks, even celebrities lined up, desperate to join. Those lucky enough to be accepted bragged to their peers, proud to be under Madoff's safe management. The secrecy only fueled the mystique. If it was hard to get in, it had to be worth it. But the real genius of Bernie Madoff wasn't finance. It was trust. He understood that people don't invest only in numbers. They invest in people. With his calm smile, quiet voice, and impeccable reputation, he disarmed skeptics and silenced doubts. He had been Nasdaq's chairman, a pioneer, a philanthropist. He didn't need your money, so why would he lie? That was the illusion. In truth, there were no trades, no strategies, no magic. He was running the world's largest Ponzi scheme, simply recycling money. But as long as investors kept coming, the dream continued. And for decades, no one questioned the man who seemed too good to be false. That was Madoff's greatest victory, and Wall Street's greatest blindness. Before the headlines, before the scandal, Bernie Madoff was just a boy from Queens, New York. The son of working-class immigrants, he grew up in a modest neighborhood where ambition was his only currency. He dreamed of success, of proving that an ordinary kid could rise to extraordinary heights. Like millions of Americans, he was chasing the promise of the American dream: security, respect, and prosperity. His story was relatable because it began like so many others: a young man with limited means but limitless desire to succeed. Madoff worked his way through school, saving money from lifeguard jobs and side hustles. With those savings, he launched his first investment business in the 1960s, not from a skyscraper, but from a small office in Queens. His determination impressed friends and neighbors. They saw a hard-working man chasing opportunity, not a swindler. To early clients, Bernie was approachable, charming, and sincere. He didn't wear arrogance, he wore modest suits and spoke like one of them. That authenticity made him seem trustworthy, a man worth believing in. By the 1980s, Madoff had climbed higher. He wasn't yet the untouchable figure of Wall Street, but a family man with relatable struggles. He balanced business with raising children, attending community events, and supporting charities. To his clients, he wasn't just a financial advisor, he was their neighbor, someone they saw at school fundraisers and synagogues. This closeness made people feel safe. Madoff seemed less like a distant banker and more like a friend protecting their future. That was the secret. Trust born from familiarity. Bernie Madoff's genius was not in finance. It was in psychology. He understood that investors craved one thing above all else: certainty. The stock market was a place of chaos. Fortunes rose and fell overnight. But Madoff presented something magical: steady, consistent returns. Year after year, his clients received reports showing profits regardless of whether the market was booming or crashing. Unlike other traders who boasted about wild gains or took credit for risky bets, Madoff's numbers were modest. 8 to 12% annual returns, always positive, never spectacular. It was boring. But in finance, boring can be seductive. Investors didn't want fireworks. They wanted reliability. And Bernie Madoff gave them exactly what they longed for. His strategy was cloaked in mystery. He told people he used a method called a split-strike conversion, involving options trading and blue-chip stocks. It sounded complex enough to silence questions, yet simple enough to appear legitimate. Few understood it, but that was the point. Complexity breeds trust. If it's too sophisticated for you to grasp, then surely it must be real. Madoff also created exclusivity. Not everyone could invest with him. In fact, he turned people away. This reverse psychology made his fund seem like a secret club. If you were allowed in, it was an honor. If you were rejected, you wanted it even more. People begged for a chance to invest, bragging to friends if they succeeded. It wasn't just about profits, it was about prestige. The illusion deepened through feeder funds. These were investment firms around the world that funneled billions of dollars into Madoff's operation. Wealthy Europeans, Latin American elites, and American foundations all sent money through these intermediaries. Some didn't even know their money was with Madoff. They thought they were investing in prestigious funds. In reality, it all flowed to the same black hole. Behind the scenes, there were no trades. Madoff's so-called investment floor in his office was a joke. Employees pretended to trade, printing fake confirmations. Old investors were paid with money from new ones, classic Ponzi mechanics. But because withdrawals were rare, why pull money when you're always making steady returns? The scheme kept growing. By the early 2000s, Madoff controlled tens of billions. His reputation soared. Charities trusted him. Celebrities like Steven Spielberg invested with him. Even banks, supposedly the guardians of financial wisdom, handed him billions. He became too big to doubt. The brilliance of Bernie Madoff's fraud was not just the promise of steady returns. It was the machinery he built to sustain the illusion. For decades, regulators, accountants, and investors peered at his empire and saw nothing but perfection. The truth was hidden in plain sight, buried beneath layers of deception so carefully crafted that it seemed impossible to doubt. Madoff's office was split into two worlds. On one floor, his legitimate market-making business operated. Dozens of employees bought and sold securities in the open market, providing liquidity to Wall Street. This side of the company was clean, transparent, and profitable enough to win him accolades. Regulators saw this floor and assumed everything else was the same, but upstairs, in a separate locked area, the fraud lived. Few employees were allowed inside. This was the investment advisory division, ironically, the core of his empire. Here, clerks produced fake account statements for thousands of clients. Using outdated IBM computers and dot matrix printers, they created the illusion of trading activity. Stocks purchased, options sold, dividends earned. In reality, no trades were executed. The documents were pure fiction. Every detail was forged to perfection. The statements even included small losses to make them seem realistic. Clients saw modest fluctuations and felt reassured. If the numbers were always flawless, they might have suspected something, but the subtle imperfections made the fiction believable. Madoff also manipulated auditors. His colossal operation handling billions, should have been audited by one of the Big Four accounting firms. Instead, his supposed auditor was a tiny two-person firm operating out of a strip mall in New York. Regulators barely blinked. After all, this was Bernie Madoff, a former NASDAQ chairman, a philanthropist, a man above suspicion. The deception was reinforced by relationships. Madoff donated to charities, served on boards, and mingled with the elite. He wasn't just a financier, he was a friend, a benefactor. His presence at galas, fundraisers, and country clubs cemented his image as trustworthy. Investors who lost everything later admitted they didn't invest in Madoff's strategy. They invested in Madoff himself. Fear also played a role. Many investors claimed they never fully understood what Madoff was doing, but they were afraid to ask questions. To challenge him would mean losing access to his exclusive fund. So they stayed silent, enjoying the returns and ignoring the doubts. Silence became complicity. This web of trust, fear, and illusion grew stronger every year. Even when whistleblowers like Harry Markopolos raised red flags, submitting detailed reports to the SEC explaining why Madoff's numbers were impossible, the system ignored them. Regulators visited his office but never dug deeper. Why would they? Madoff was untouchable. The machinery of deception was now unstoppable. Every month, thousands of statements left his office, showing profits that didn't exist. Every day, new money flowed in, and every year, the lie grew larger, more dangerous, and harder to unwind. By the mid-2000s, Bernie Madoff had reached the summit of deception. His operation had grown so large, so deeply embedded in the global financial system, that no one could imagine it being a fraud. He was managing money for universities, charities, billionaires, even foreign banks. His name carried such weight that to question him felt absurd, almost laughable. Madoff understood this power and exploited it brilliantly. He crafted an image of exclusivity. Investors weren't invited, they begged. His fund was whispered about at country clubs and luxury dinners. If you could get in, you were special. The mystery made him irresistible. People feared missing out more than they feared being deceived. His social life fed the myth. At galas, he rubbed shoulders with America's wealthiest families. He was the generous donor, the soft-spoken philanthropist, the grandfatherly figure who seemed incapable of cruelty. His quiet modesty only amplified his allure. Unlike Wall Street sharks who flaunted yachts and mansions, Madoff appeared humble. He wasn't flashy, he was safe. That restraint was his greatest disguise. Inside his firm, control was absolute. Employees in the fraudulent division lived in a world of secrecy. They weren't traders but clerks, carefully fabricating data. Some knew the truth, many didn't, but they were loyal, either out of fear or ignorance. Every month, they mailed out thousands of fake statements, each a thread in the fabric of his illusion. By this point, billions had poured in from all over the world. Feeder funds in Europe and Latin America funneled wealth into Madoff's black box. Private banks recommended him to their richest clients. Pension funds, built on the savings of ordinary workers, trusted him too. The scale was staggering. Tens of thousands of lives tied to one man's deception. And yet, cracks were forming. A few analysts noticed inconsistencies. Trades that couldn't have happened, profits that defied logic. Harry Markopolos, a financial investigator, sent multiple warnings to the SEC, proving mathematically that Madoff's returns were impossible. But the regulators dismissed him. After all, this was Bernie Madoff, former NASDAQ chairman, Wall Street statesman. How could he be lying? The truth was simple. He wasn't brilliant, he wasn't unique, he was just recycling money. But the longer it lasted, the more impossible it seemed to stop. If he confessed, the empire would collapse. If he continued, the lie would grow even bigger. So he kept spinning, trapped in his own creation. By 2007, His scheme had ballooned into the largest financial fraud in history. The lie had become bigger than the man. Bernie Madoff stood at the peak of his illusion, admired, envied, untouchable. Yet deep inside he knew. One shock, one crisis, one wave of withdrawals, and everything would come crashing down. The end came not with a slow decline, but with a crash. In 2008, the global financial crisis tore through Wall Street. Markets plummeted, banks collapsed, and fear spread like wildfire. Investors everywhere demanded liquidity. They rushed to pull their money from funds, desperate to survive. For Madoff, this was the nightmare he had long feared. For decades, withdrawals had been limited. Investors trusted him so deeply that they rarely took their money out. But now, panic changed everything. Within weeks, Madoff received billions in withdrawal requests. He had nothing to give. The vault was empty. There were no investments, only lies. Inside his office, chaos reigned. Phones rang constantly. Clients begged. Some screamed, demanding their money. Employees in the secret division stared at each other in silence, knowing the charade was over. The scheme, once a giant machine of illusion, collapsed under the weight of reality. On December 10, 2008, Bernie confessed to his sons, "It's all one big lie." They were horrified. The man they idolized, who taught them business, revealed he was nothing more than a criminal mastermind. The next day, they turned him in. The FBI arrived at his Manhattan penthouse, and Madoff greeted them calmly. "I know why you're here." Just like that, the empire was gone. The collapse sent shockwaves across the globe. More than 37,000 victims in 136 countries were devastated. Entire families lost life savings. Retirees who trusted Bernie for stability were left penniless. Charities that depended on his safe returns shut their doors. Universities and foundations collapsed under the weight of losses. The betrayal cut deeper than money. People didn't just lose wealth, they lost trust. For years, Madoff had been more than an investor. He had been a friend, a confidant, even a father figure. Some investors defended him until the end, convinced there had to be a mistake. When the truth was undeniable, heartbreak turned to fury. Tragedy followed. Several victims took their own lives. One was a French aristocrat who lost billions through feeder funds. Another was a former U.S. soldier who entrusted his pension to Madoff. The pain stretched far beyond Wall Street. It was personal, intimate, and cruel. Even institutions were not spared. Global banks like HSBC and Santander suffered huge losses. The financial world, already reeling from the 2008 crisis, now faced the humiliation of falling for the too-good-to-be-true dream. The ripple effects scarred markets for years. In March 2009, Bernie Madoff stood before a federal court. Once admired as a titan of Wall Street, he now faced a packed courtroom filled with angry victims, reporters, and cameras flashing relentlessly. Calmly, he pleaded guilty to 11 federal felonies, including securities fraud, wire fraud, and money laundering. He admitted everything, offering no excuses. The judge listened as victim after victim described their ruin. Lives destroyed, futures erased. Some wept, some shouted in anger, others begged for justice. One man yelled, "I hope you rot in prison!" Madoff stood silent, head slightly bowed, his faint smile gone. On June 29, 2009, the sentence was delivered. 150 years in federal prison, the harshest punishment possible. The courtroom erupted. Some victims cheered, others cried. It was justice, but it could never restore what was lost. Madoff spent his final years in prison, where he remained until his death in 2021. He died not as a Wall Street genius, but as the symbol of betrayal, the architect of the world's greatest financial crime. His name, once celebrated, became synonymous with fraud. The story of Bernie Madoff is not only about greed, it is about trust misplaced. People didn't invest in Madoff because of charts or algorithms. They invested because he seemed trustworthy. He was calm, confident, and familiar. He looked like the very definition of respectability. A former NASDAQ chairman, a philanthropist, a family man. He played the role so well that people forgot the oldest lesson in finance. If something sounds too good to be true, it probably is. Madoff's scheme thrived because people wanted to believe. They wanted certainty in a world of uncertainty. His steady returns were not just financial numbers, they were comfort, hope, and even pride. For decades, no one wanted to see the truth because the illusion was more pleasant than the risk of doubt. This is the danger of blind faith. In leaders, in markets, even in friends. The real victims of Madoff's crime were not only the wealthy. They were teachers, retirees, veterans, and charities. People who had worked their entire lives hoping for security in old age were left with nothing. Communities that depended on philanthropy collapsed overnight. It proved that financial fraud is not abstract. It has faces, names, and tears. The broader lesson is clear. Trust must never be blind. Transparency, accountability, and skepticism are not optional, they are essential. Regulators failed, auditors failed, but individuals also failed by ignoring the warning signs. Madoff's returns were impossible, but because they wanted to believe, they closed their eyes. The cost of that silence was catastrophic. Madoff's legacy is not wealth, but a warning carved into financial history. His name has become a synonym for fraud, a reminder that even the most respected faces can hide deception. From Wall Street to crypto markets today, his story echoes. Scams evolve, but the psychology never changes. Greed, fear, and blind trust are timeless vulnerabilities. The moral is this. Protect yourself by asking questions, demanding evidence, and remembering that extraordinary promises hide extraordinary risks. If someone guarantees profits without risk, they are not offering opportunity, they are selling a lie. Thank you for watching. If you found this story eye-opening, please like, share, and subscribe to Financial Story so you won't miss the next shocking chapter in the world of money, fraud, and history. Bernie Madoff fooled America, but his story should ensure no one else does the same. The greatest lesson he leaves us is vigilance. Never surrender your judgment, never silence your doubts, and never forget that trust once lost is priceless.